Hi there, you're watching Market Cafe on ET Now with me, Shreyanshi Singh, and over the next 1 hour, me and Priyanka Uppal will be taking you through news and updates from within the country as well as across the globe. Also tell you which stocks you should be keeping on your radar as well. But first things first, let's get started by taking a look at what the US markets just did, and it's been quite the roller coaster. When you take a look at what really happened in the session gone by, you did have that tech sell-off taking hold. So when you take a look at the S&P 500 futures, first of all, they're rising. When you take a look at the S&P 500 Nasdaq futures as well, and even futures tied to Dow Jones. On the flip side, those stocks were under pressure during Tuesday's regular trading session. All three major averages, in fact, finished solidly in the red. So that's the kind of move that you're looking at. This was, of course, on the heels of the new data on the state of the US services industry. So whether you look at the Nasdaq, that was the one that was leading the pack in losses. That dropped nearly 2%. Or if you look at the broad market S&P 500 as well, you're looking at losses there as well. So 1%, over 1% losses of what you have at hand. When you take a look at S&P 500 as well, and even when you take a look at the blue chip Dow Jones as well, that was the one that also slid about 0.4% thereabout. Now, in terms of leading the losses, you do have Nvidia that was leading the losses in tech in the session, falling more than 6%. So that's the AI darling, slipping more than 6%. That's the kind of move that you have there. And when you take a look at the Tesla as well as Meta platforms, both tumbled 4% and 2% respectively. So quite the sell-off that we had when you take a look at the US markets. Now, in terms of what investors are looking ahead to, it's the ADP private payrolls report. Other than that, there's the jobless claims data that we're keeping an eye on. So quite a sell-off when it comes to stock, the Wall Street then, Priyanka.
Absolutely. Morning, Shreyanshi. We have seen it. Now, you know that the jobs report, the US jobs report, which has of course come on a rise, that has actually signaled a diminishing odds of our larger rate cuts by Fed, and that's what actually made the indices lower. And bond yield also jumped because of this. We've seen bond yield jumped to a highest level ever since we've seen in April month. It was 4.6% higher than this. But then let's understand how did crude reacted to this entire scenario. Before that, two key data points that are to be released slated to be released today are: one is ADP private payroll report as well as a jobless claim data. Along with that, we will have minutes from the Fed's last minute on the tap today. Now, understanding how did oil reacted. Oil price did gain on Tuesday, majorly driven by the concerns over tight supply from Russia, Iran. There are some sort of Western sanctions that is looming the fear among the traders, and of course the expected higher Chinese demand. Now, Brent crude future, that one advanced 75 cents, nearly 1%. WTI crude was trading at $74.25 per barrel, nearly 69 cents up. At the same time, if you look at gold, now how did gold react? Gold's spot price was also up by 0.5%, trading at $2,647 per ounce. And this is, of course, this has risen nearly 1% after we saw earlier in the session. The gold futures are also up at this point in time. So equity saw a sell-off, treasury yield went on a rise, and of course, safe haven gold was up also.
Well, absolutely. And let's get you some more news and updates then. While the services sector in the United States then accelerated jobs openings all to follow suit to surprise the street. Job openings for the month of November increased by 259,000 to the 8 million mark. Meanwhile, when you take a look at hiring, that also witnessed some softness, suggesting that the labor market continues to show signs of slowing at a pace that probably does not require the Federal Reserve to be in a rush to cut rates then. Like we mentioned earlier, country's services sector then sported strength too. But when you take a look at tariffs, they continue to be a source of concern.
All right, but now shifting focus to news flow around US President-elect Donald Trump, who has reportedly announced investments worth whopping $20 billion aimed to building data centers. Now, the development move largely backed by Emirati billionaire Hussein Sajwani, chairman of DMAC Properties. The first phase of the plan will take place in Texas, Arizona, Oklahoma, Louisiana, Ohio, Illinois, Michigan, and Indiana. Remember, Trump, who takes office on January 20th, has sought to attract more foreign entities to do business in the US by offering perks such as expedited permits for those that invest $1 billion or more than that.
Let's take stock of some news and updates related to Tesla. Then, while the stock was down 4% in trade yesterday, you did have the National Highway Traffic Safety Administration in the US that has initiated a probe into as many as 2.6 million Tesla cars on account of the remote control feature. Preliminary investigation follows 4 reported crashes. As per the probe conducted so far, vehicles failed to detect posts of parked vehicles when using the feature. Then the probe in fact covers 2016 to 2025 Model S and X vehicles, 2017 to 25 Model 3 and 2020 to 25 Model Y models as well. Now, important to note here, of course, that President-elect Donald Trump will take office in 13 days, and Tesla CEO Elon Musk is a close advisor who has previously criticized the NHTSA's actions.
On to some stock-specific action now. South Korean electronics giant Samsung Electronics flagged weaker than expected profit for the fourth quarter amid large rivals and their might to supply memory chips to AI industry. Samsung, which is the world's biggest memory chip maker by capacity, is grappling with a string of delays in developing high bandwidth memory chips to supply to the AI industry.
Rather than moving on to the United Kingdom, where the long-term government borrowing costs have hit their highest since 1998, adding to the problems facing Finance Minister Rachel Reeves, who plans to borrow hundreds of billions of pounds to fund higher public investment as well as spending. However, British yields have risen further in recent weeks as most investors expect the Bank of England to cut interest rates by only about half a percentage point this year, with inflation likely to hover above the central bank's 2% target as well.
All right, with this, we stay for a short break here. When we come back, we get you the cues from the Asian market and, of course, the buzzing stocks for the trade today. Don't go anywhere. Welcome back. You're tuned into Market Cafe on ET Now. This is Priyanka along with Shriyansi now. Time to keep a check on the Asian markets. We did saw a rally in the tech stocks in Japanese market. That has propelled the market there. Well, we have Asia, ASX 200 at the moment, which is trading with a positive bias, but Kospi is down by 0.5%. Let's get you Nikkei also. Nikkei, which was actually, the tech stocks actually helped them rise in that the early initial gains we saw, but then now it's showing us a cut of nearly more than 0.5%, 0.7% is the loss that is coming on the index right now. At the same time, if you look at topics, let's get you that screen also. It's a mixed bag of views coming in from Asian markets. It's not the sea of red, but it's a mixed set of cues coming in. ASX is the market which is trading with a higher base, 0.5% up. Japan is down right now. Topics is trading with a cut, with a loss of 0.5%, and even Kospi is lower at this moment. So not a very strong sort of cues coming from, not even from the global markets and even the Asian markets. And what we see on the GIFT Nifty also implied is also showing us a cut of around about 40 points. So let's see, are we in for a slower start and maybe then we later pick up, or we see a consolidated session today, Shriyansi?
Well, absolutely. And with that handover, it's let's see how that really pans out for us. But with that, let's also take a look at the jam-packed lineup that we have for you on the market. At 9:20, we'll be in conversation with Rahul Chadha, who's the founder and CIO at Shikara Investment Management, to decode the outlook that he's then penciling in for the year 2025, and to take that conversation forward, that at 9:30, Vinay Sharma, fund manager, equity investments at Nippon India Mutual Fund, will also be talking to us about this year and what the outlook looks like. At 9:40 then, to also understand the kind of expectations for Q3 earnings, Kumar Rakesh, India analyst, IT and Auto at BNP Paribas, is going to be in conversation with us. And at 9:50 then, to decode everything to do with the capital markets versus banks in terms of Qs, Gurmeet Chadha, who's the managing partner and fund manager at Complete Circle Consultants, will also be in conversation with us. And to also discuss the chemical pricing trends, then at 10 a.m., Ajay Joshi, chemical industry expert, will be talking to us. MFI outlook then will be discussed with Sadaf Saeed, CEO Muthoot Microfinance, at 10:20. So keep an eye on all of those conversations that we have lined up for you.
So ahead of the key earnings that are starting from 9th with TCS, we have the power pack action lined up for you in the TN.
Welcome back. Thank you so much for staying tuned in. Well, let's put the spotlight on the India's macroeconomic picture then. As per the advanced estimates, in fact, GDP is expected to rise 6.4% this financial year, slowing from 8.2% in 2023 to 24. Growth also expected to be pulled down to the lowest in 4 years by a decline in manufacturing and investment growth. Then, when you take a look at growth, averaged 6% in the first half and is likely to average 6.8% in the second half as well. As per the latest numbers, the gross added value added numbers indicate that the manufacturing sector is then expected to witness a slowdown, with growth falling to 5.3% then from 9.9% in the previous year. Similarly, when you take a look at investment growth, that has also disappointed, with growth also falling to 6.4% from 9% witnessed in the previous year as well. What does this data then mean for the economy going forward? We also decoded this with experts. Let's go across and listen in to what they then had to say.
The growth was expected to come down in any case, I mean, in 24-25, because you had somewhat lower fiscal stimulus, and also on top of that, monetary tightening also was playing out. So that was bound to bring the economy from above trend rate of growth last year to close to trend. Now, what happened was that in the second quarter, GDP slid much faster than expected. And one of the reasons was slower government infrastructure spending, or capital spending, so to say. Now, what this estimate suggests is that, one, that the rest of the year is unlikely to make up for the investments that were not done as scheduled earlier in the second quarter. So I think I'm not too worried about this growth right now.
Our sense is that for FY25, we're going to end up with quite a large miss on the capital expenditure as compared to the revised budget estimate, which we got in July. I would imagine that looking at where the numbers were till November, it's going to be difficult to even get to 10 trillion now as far as the FY25 capex is concerned. For FY26, possibly, our early workings are suggesting that we can work with overall capex target of around 11 trillion. So very similar to the budget estimate for this year. And on the lower actual outcome for FY25, that should end up giving us a pretty good growth. And that is something that will then end up pushing the overall GDP growth next year.
This is the time to take hard decisions. And here the question then is that how does one do it? We know that consumption is weak, but would giving more transfers actually make the situation any better? In this situation, I suspect not, because the kind of demand that would be generated by what are called the freebie system is not the kind of demand you really need at the moment. So I think the government would be better advised to continue with its capex push.
Clearly, experts are a little cautious on the slowing growth and, of course, the capex push, which is required by the government side. Is that what is the need of the hour? Seems to be what experts have commented. But moving on, let's get you some key interaction also. We can expect double-digit earnings growth ahead. That's the word coming in from Mahesh Patil, who's a CIO of Aditya Birla Sun Life AMC. He sat down with 80 Now for an exclusive chat, sharing his take on the outlook for calendar year 2025. But what's driving his optimism? Here is his rationale.
So as we step into this calendar year, there are a lot of uncertainties which are there. On the global front, if you look at the Trump trade, which is to some extent being played out currently, and what it does to tariff wars and the currency, I think that's going to be the key thing to watch out in the first half or the first quarter of this calendar year. Also, we've seen that there is the normalization of growth, right? We've seen a very strong growth after COVID, especially in the corporate earnings growth. That is now normalizing back to the kind of a long-term average growth rate of around 12 to 13%. And there has been a short-term slowdown in the economy, which has been there because of the slightly on the fiscal side. Okay, we have seen that the government spending has been a bit slower. So I think those things should normalize. And as we step in, I think we should see after a couple of quarters, the earnings growth, which is now tracking around single digit, should go back into double digit. But more so on the valuations, if you look at the large cap, the Nifty, it is now after the correction, what we have seen, is somewhere closer to the long-term average. So we would expect there at least the returns should track the earnings growth going forward. Obviously, there could be some volatility because of the liquidity and how the FI flows flow in. But the mid-cap and small-cap segment, where also the growth is now converging, what we have seen in the large-cap space, but the valuations are much higher. There, I think there could be some risk, of more normalization of valuations and where there could be risk to return. But more, I think this year what we're seeing is that the market breadth is likely to kind of narrow down. What we had seen, unlike in the last 3-4 years. And the market will be much more stock specific, more bottom up. I think that will be the key in terms of generating outperformance. Overall, we would expect more moderate returns for equities, at least for the Nifty in this calendar year.
You've also mentioned that when it comes to looking at global outlook, currency is something that needs to be monitored. So how do you see the Indian rupee performing this year?
So rupee, if you look at, despite the recent depreciation, what we have seen actually has done much better, right, compared to all other global currency. It's because the US dollar has appreciated significantly, right? That's where we have seen the appreciation. Rupee has become slightly overvalued over a period of time because of the large inflows. What we have seen, we see the rupee is overvalued by around 3% or so. There could be some normalization of that trade in the coming quarters or so. And to that extent, we expect that the rupee could depreciate down to around 88 by the end of this calendar year.
Aradhan, that was the word coming in from Mahesh Patil of Aditya Birla Sun Life AMC. But moving on from one exclusive conversation to another, then my colleague Sameer Dikshit also had the chance to speak with the Heavy Industries Minister H.D. Kumaraswamy on the prospect of BHEL's order book expansion and the steps that the government then is taking to achieve targets in the said direction. Let's go across and listen into a slice of that conversation as well.
BHEL, their performance compared to last 5-6 years, they're moving in a very positive direction in the growth of the country. Okay. In 2023-24, their work order was 70,000 crore. Now it has crossed 1,70,000 crore. They are contributing in a big way. Absolutely. In several departments, in defense, even in railways, power sector, everywhere they are involving. They are doing very hard work. They are contributing to the growth of the country in a big way.
Sir, you are a minister who is known for setting ambitious target, the big target going forward. Order value of 1,70,000 and maybe next 3 years or 5 years down the line. What big picture you understand?
Going to double or triple it. What our Prime Minister's vision is there. By 2047, Vikasit Bharat is actually he's looking after that. In that Vikasit Bharat contribution, BHEL going to play a major role. Okay. For Vikasit Bharat.
And last would be on the HMT. You are also looking to revive HMT.
Let us see. It will take time. Okay. Because just 6 months is over. We are working out to revive several PSUs.
Okay, so looking forward to further strengthen BHEL and quite many other key comments coming on the PSU revival from the H.D. Kumaraswamy in an exclusive chat. But on to another important news. Ola Electric's troubles continues to mount as a Karnataka High Court denies relief in the ongoing CCPA probe. Now, CCPA stands for Central Consumer Protection Authority. Now, Ola, the company, has been asked to provide additional records related to a staggering 10,466 consumer complaints about its scooter so far. With the CCPA investigation looking into these complaints, things aren't looking smooth for Ola Electric ride. My colleague Sameer Dikshit filed this report earlier. Listen in.
Karnataka High Court has refused to grant any relief to Ola Electric in the ongoing probe by CCPA. There has been more than 10,000 complaints that has been registered before the National Consumer Helpline number between July till August 2024 related to the problems with the electric two-wheelers of Ola Electric, and based on which CCPA initiated the investigation, had sent a show cause notice to Ola Electric. But now if you see the development which has now come to Karnataka High Court as well. So there is an ongoing case where Karnataka High Court has categorically said that Ola Electric has to furnish the additional documents as asked by the investigating officer appointed by CCPA. So the counsel from the Ola Electric side, they have raised two important things. First is that the investigating officer is not competent, it is not to the appropriate rank or level. So these additional documents should not be given to the investigating officer. And the second point that was raised by the counsel from the Ola Electric side, that the furnish of the document will tarnish the image, will bring a bad repute to the company and also to the owner. But on these particular things, the High Court has said that no, the investigating officer is competent and well within the Consumer Protection Act and has been appointed by CCPA. So the additional document has to be furnished to the investigating officer, point number one. Point number two, it has been said that till the investigation is going on, the High Court has mentioned that no officer from CCPA side will make any statement or will give any media bite or will come in public domain and give a statement. So that sort of order has also been given from the Karnataka High Court. But the important and the big development is that relief has not been granted by Karnataka High Court. The investigation will go on, and CCPA has said that once the entire investigation will be completed, then they will come to a conclusion. So definitely things are not going appropriate, not going good for the Ola Electric.
Well, absolutely. Thanks, Samir, for getting us all of those important details about Ola Electric then. But time for a very quick breather on the show. When we come back, we'll get you some more news and updates, so don't go anywhere.
Welcome back. You're watching Market Cafe on ET Now. Now time to get you all the stocks that could be buzzing in the trade today. Gaurav is standing with the whole list of the stocks. Gaurav, morning.
Let's begin our list today with Sobha, because we are getting some Q3 updates from the company. When we look at the sales number, the total sales have gone down almost by 28% on a year-on-year basis, although it is up almost by 17%, but we will be watching out on Sobha. Other than that, Tata Steel also came up with their quarterly updates. Tata Steel said that they delivered the best ever third quarter for the company with 5.29 million tons of sales. And when we talk about production, that was up almost by 8%, while deliveries were up almost by 4% on a sequential basis. Other than that, RVNL will be in focus today because the company has signed MOU with the GBH International Contracting, and with this they will be expanding and exploring some projects in Dubai. Other than that, Maruti Suzuki will also going to be in focus today, and the reason being that company unveils E4Me, which is a vision for India's electric vehicles from Maruti Suzuki. At the same time, company has also said that they will be unveiling its first made in India E-Vitara, which will be electric vehicle from Maruti Suzuki. Lastly, we will be also watching out for Tata Technologies, because company has now joined hands with Telechips Forces for the innovative solution in the next-gen software-defined vehicles. So definitely watching on all these companies on the back of news flow that we have received in the morning.
For that update coming in. Moving on, then let's get to the futures and options roundup. In fact, Ansh is standing by with just that. Ansh, over to you.
Sure. So market had fallen on Monday and it was a deep cut, but in previous session we saw some recovery, though it was not a big recovery, but some gains. Also Nifty closed within its previous session range only, so we can see some pause or consolidation in this level. Now if we talk about index future, then we are seeing open interest has gone up by around 1.7%, indicating long build up, which is a positive sign. Whereas on option front, we are seeing most active call writing happening directly at that psychological mark of 24,000, indicating very strong resistance around this level. Now, though we are having very strong resistance around this level is around 300 points away from current level, so we can say that we have a good space on upside of around 200 to 300 points. If we talk about Nifty Bank, the Nifty Bank made a similar trend that of Nifty, because even Nifty Bank gave a small recovery in the previous session, closing within its previous session range, indicating consolidation range. Here if we talk about index future, then we are seeing open interest has fallen by around 6%, indicating short covering, which is also a positive sign. Now, if we talk about index future, then FII in the previous session have added around 9,600 contracts. At the same time, they have added some short as well by around 8,100 contracts. But net to net basis, we are seeing addition of around 1,500 contract almost, due to which the total long position has inched a bit higher from 18% to 19.8%. But they have remained below 20% for 7 to 8 consecutive sessions, indicating some pressure on downside.
Okay, Ansh, thanks very much. So some longs added, but then situation hasn't changed so far. But let's see how do both the indices pans out. We've seen that the gap has narrowed down now. We just showing GIFT Nifty implied showing just a 13-point of cut right now. But there's an interesting report by MK on Paytm after they did meet. Paytm's analyst meet. MK has released a note on the key takeaways of the meet. The management expects to regain 100 million MTU in the next 12 to 18 months. Varun is here with all the details on that. Varun, I remember reading a report on Paytm could be a bit positive by Q4. Did anything come from this analyst meet? Tell us all the details.
So MK has hosted the management of Paytm, and there are several signs of improvement in Paytm that could be seen from the management interview. Let me tell you first that the Paytm is actually gradually emerging from the regulatory curves that were imposed on Paytm earlier, and they are witnessing positive results from the MPCI approval which they recently got. And actually Paytm is also expecting that they would get the RBI approval for payment aggregator in due course, and after that the company would actually start onboarding new online merchants. The company expects to regain its earlier high of 100 million MTU in the next 12 to 18 months. Actually, if you look in Q2, the average consumer MTU saw a decline, and they are expecting to reverse this in the coming quarters, especially after the NPCI approval to onboard the new UPI users. The new merchant onboarding and the GMV growth is expected to pick in the Q3, and also because of the festival season, the company will get some support. Although the company is saying that in the wealth management business, they are experiencing a temporary slowdown, and this is because of the new F&O rules that SEBI has come out. But yes, going ahead, it would show some improvement. Also, the company expects to add around 2 to 3 new lending partners under the FLTG agreement. So there are several points that have come out with this management interview, and there are some signs of improvement that has been seen in the management interview or the management that MK hosted.
Varun, thanks for getting us that update. Then that's the stock to watch out for Paytm. But moving on, then let's get you some important commentary. In fact, we caught up with Gautam Trivedi, who's a managing partner at Nepean Capital, to discuss the sectors he's positive on, from hotels and tourism to real estate, then to power and energy. Let's go across and listen in to what he then had to say about all of these sectors.
If you just look at the November numbers, I was looking at the ARRs for the average hotel industry. They're up 11% year on year. RevPAR up 23%. Occupancy at 70%. And if you just look at even Indian Hotels, which is obviously the largest hotel company in India, Puneet Chhatwal's done such a phenomenal job. I mean, he's opening a new hotel every fortnight for this fiscal year. 25% of the new keys that are coming up are in tier 1 towns, and 44% are in tier 3 and tier 4 towns. So this tells you the penetration of tourism. It's not limited only to the big cities or the usual Agra or Rajasthan, but it's actually percolating down to smaller towns. So I think tourism is definitely a big bet. Real estate, I think, has still a couple of more years of legs left in them. And my view is that as we get closer to a 5-year cycle of the real estate sector of real estate development, where people would actually get keys and move into their apartments, you will see a big spurt coming in everything that a new home needs, starting from furniture to paints to new cars, kitchen appliances, etc. So I think that will end up helping some resumption of consumption across various sectors that are linked to real estate. The other area which I think is going to be a big focus is going to be power. And at the heart of the entire power demand actually is AI. So besides the overall electrification, which a developing country like India needs anyway, AI is now the new paradigm, which is guzzling a lot of power consumption. So an AI search consumes, as you know, 10 times more power than a simple Google search. An AI image search consumes 50 times more power than a Google search. So when you start adding all this up, and 700 to 800 million smartphones out there, if people stop using or reduce search queries on Google and actually go to AI, think of all the power that's going to be needed to complete that query. In fact, I reprimanded my son the other day, my older son, when I asked him to search for something, and he went to ChatGPT versus Google, and I said, "Look, you just ended up wasting so much energy on completing that search." So I think power is going to be a big theme for the next several years, including 2025.
Gautam, everyone is bullish on financials. Everyone's bullish on financials.
Yeah.
But it is not moving. Why is that?
My view is that people are looking at financials from a valuation, and the fact that it's been dead money for the past 2 to 3 years. A lot of the big name private sector banks have done nothing for 3 years in a row. But I am still not fully convinced that now is a good time to put money in financials. System credit growth is down to 11%, which was about 13% in the second quarter. I don't see any major NIM expansion anytime soon. Unsecured retail lending is still a major issue, which includes MFI. And a lot of the private sector CapEx, which hasn't really taken off, but whatever has taken off is largely being funded by equity issuance, internal accruals, and a lot of the larger groups are taking foreign debt. So that credit growth, I don't see it necessarily coming back in a hurry. And if that's not going to come back, just looking at mere valuations to buy a sector or stocks, I don't think it's a good idea.
So that's a view coming in positive when it comes to tourism, positive when it comes to real estate. Power, of course, has been that multi-year theme as well, which continues to work out well. But you were talking about how some of the export-facing companies might just see opportunity with what's happening in the United States. With that context in mind, what's the view on IT and pharma?
So I think pharma should be a positive. I mean, if you want to bring down, as President Trump has said, inflation, it can't be limited only to groceries. It's got to be also to medicines. And medicines, as we all know, when we all travel to the States, we pack up our medicines from India and take them there because the cost of the same medicine is 10 to 20x in the United States. So will the president end up spending, lowering tariffs specifically for medicines? If I was in issues, I would do that because the cost of healthcare is exorbitant in the United States. So that's definitely one of his campaign promises. IT, I think, is way too early. I would love to see IT return because, again, another sector for the last 2.5 to 3 years has been quiet. It's picked up in the past 6 months, but in the hope that business will resume. But I think the question is, how is AI going to impact Indian IT? And question is AI, has the AI hype run ahead of reality? So hopefully over the next 2 to 3 years, we will see what exactly is AI going to be able to deliver profitably and how those applications are going to be useful to boost productivity. So it's very early, but I think valuation comfort is there for IT. So if somebody wants to take a call, I think now might be a good time.
The renewable energy theme, Gautam, because that also turned out to be quite the fad in the market, structural as it may be. Do you think the timing is right? And now there are opportunities enough over there?
So, the other thing which Indian IT started doing, which has been very interesting, and they've been sort of quiet about it, is the fact that the whole GCC phenomenon in India, which the whole world is looking at, frankly, you've seen a lot of the major US and European companies set up GCCs in India, but the smaller and mid-sized GCCs are actually outsourcing their own GCCs in India to Indian IT companies who are well equipped to actually manage and staff those GCCs. So I think that could potentially become a very big opportunity. A lot of the companies we've spoken to don't share how big that is or how big that was 5 years ago and how big that is as a percentage of revenues today. But I think that is a clear opportunity for Indian IT.
Right, so FIs do not want to invest in EM, and the themes that Gautam spoke about, he's bullish and has a cautious view on. Moving on, let's get you some key stories from the globe and of course from the Indian markets. First, Jeff Bezos owned Washington Post would lay off 4% of his workforce in a bid to cut costs. The storied newspaper is among many news outlets struggling to maintain a sustainable business model. The Post has seen a decline in its digital readership and reported a $77 million loss in 2023. Moving on to a somber news, at least 126 people have died after 6 earthquakes, including the 7.1 magnitude quake struck Tibet. Tremors were felt as far away as India, Nepal and Bhutan. Rescue operations are underway as the earthquake reduced several houses to rubble.
Alright, then moving on, in a tribute to one of India's most respected political figures, Centre has officially given a green signal for establishing a memorial for the late Pranab Mukherjee, the 13th President of India. Sharmishta Mukherjee, the daughter of Pranab Mukherjee, took to X to thank Prime Minister Narendra Modi for this significant decision then. Moving on, then, flash floods submerged Saudi Arabia's holiest city, Mecca. From cars to buses, many remain stranded due to heavy floods. Saudi Arabia's Meteorological Department has issued a red alert for Mecca, Medina and the port city of Jeddah as well. These rains come months after record-breaking rainfall across Gulf states in April last year.
All right, with this, it's a wrap on this edition of Market Cafe. Thanks so much for watching. Don't go anywhere as the market takes all the action forward.
If you like this video, then like, share and subscribe to ET Now.